or sideways action it does take. In the long run, we continue to see it making ever higher values after that time period. Remember, there are technical views for certain time periods. Right now, on the short time frame, we remain bullish till the target is run of making that 2,900. It is not my expectation that they, whoever that may be, will allow a 3,000 run so soon after a 2,000 clear-cut break.
Gold has recently displayed remarkable technical strength, sparking excitement about its future prospects. Analyst Francis the Market Sniper Hunt has identified a robust support level at $2,690, bolstered by a bullish hammer pattern and notably low volatility. Gold recently achieved a 2-month high of $2,750, driven by increased demand as a safe haven amidst tariff threats from Trump targeting China. The $2,730 level, shaped by a reversal head and shoulders pattern, now acts as a critical resistance zone, especially after gold previously tested $2,542 during a period of dollar strength. Looking forward, technical indicators suggest a potential breakout above $2,785, marked by a symmetrical triangle formation, hinting at new record highs. Hunt's expert analysis of the HVF, high-value fractal, pattern, viewed on a 6 to 8 hour time frame, suggests a target of $2,893. This pattern, activated on January 8, achieved its initial milestone by January 22, showcasing consistent low volatility breakouts and steady support during pullbacks. However, several factors could lead to a short-term pullback in gold prices. These include rising bond yields, a stronger dollar, shifting sentiment toward equities, increased interest in cryptocurrencies, and easing geopolitical tensions. As gold is denominated in dollars and dependent on mining for its supply, it often moves inversely to the dollar's strength. In the long term, gold's outlook aligns with projections from UBS, which echoes Hunt's analysis. The financial institution predicts gold could reach $2,900 per ounce by the close of 2025. While short-term sell-offs or consolidation periods may occur, the broader trend suggests that gold is likely to maintain its upward trajectory. Hunt remains optimistic about the $2,900 target.
What are we talking about? A confluence of targets are when many patterns, or two minimum, actually are giving a similar level across different time frames and potentially different pattern types. So the original call of 2,893, the doorstep of 2,900, likely to lead to a technical run of 2,900 and thereafter a rest, which has say that the 1,000 number, the round numbers of 1,000, you'll remember an upside HVF, we'll take you to that chart in a minute on the bigger time frames just now, that sat on top of the 2,000 after the once, twice, 3 times, then your lady on the break that took out the 2,000, that the next move would take you to the doorstep of 3,000. We'll show you that pattern and that jaw in a minute. What's interesting now is we are getting a winding up HVF structure. Our community may be substantially long gold. I am on this particular setup pattern. That is a 6-hour pattern. It could be stretched to an 8-hour maybe. And this is giving us a target of 2,880. 2,889, in fact, my apologies. Let's get the number from here. 2,893. We'll get it eventually. There we go. Read your own box. 2,893 on this upside HVF. That triggered in and around the 2.6 levels around the 8th of Jan. We have now the 22nd of Jan. You've got a first interim make. This is what I love about HVF method that people should learn to appreciate and value, is that you stay the course because the things that happen are expected to happen when they happen, and typically are very, very compliant. You can see quite a low vol walkout break that happened there. You did number 1 stage, the break and feign back in stage. Then you ran first interim, which is that little dotted line. We make it more faint because it's not the most important target. It's the first step. Then you get what's called the return move to funnel stage, after acknowledging and making the first interim. This is very typical of HVF setups. We're going through the 5 stages to a breakout. You'll learn about that when you do our theory. Click the link below to book a call or a course. Then you move firmly away from the funnel often what happens is the first interim then serves as support. So you had a downside revisit here before turning and closing up there and then making a high there. You've had some degree of a pullback and you've had a hammer with the base of the hammer there. So there's two respects of the first interim as a minor key level of significance, 2690. It gives you the number, it's the gateway of 27. You pull back, you just sit technically on the 27s. Remember, round numbers are pegging, but isn't that interesting how the first my first interim level target serves as support twice. Low volatility points to very low volatility after a strong hammer, which defended on the first interim, points to the likelihood of further upside. Upside comes, you run another key level, 2,730. Where did that key level come from? The reversal head and shoulders. That occurred up top here, that nobody really saw or talked about except us, I imagine, in the community again, where you had a final test of the 2,730 armpit 1, and you had the first test after the high, which is armpit 2 over there. You broke down, you made this target on the downside with a little bit of overrun as is typical. You can see a hammer in there and you got your reaction where you would have given back more than 60% of your short if you had taken a short. I don't short gold in this current environment on any time frame. And then further downside capitulation. There was a lot of dollar dominance during this period, and the gold sold off right the way down to 2,542. Some people got panicky.
Hunt anticipates that gold may experience a localized high, leading to a phase of consolidation or stagnation akin to prior market cycles. During such periods, investors may consider exploring opportunities in other sectors, such as energy or cryptocurrencies. While gold's role as a store of value remains strong, short-term resistance could precede the next significant rally. Experts forecast gold's price to range between $2,990 and $3,040 per ounce by March 2025. Silver, by comparison, is expected to trade between $28.60 and $32.60 during the same period. While these projections emphasize gold's long-term strength, short-term volatility may influence price movements. Reflecting on historical patterns, Hunt highlights that markets often undergo prolonged periods of range-bound trading before resuming upward trends. Such phases may last months or even years, underscoring the importance of timing in investment strategies. Traders and investors should remain mindful of these dynamics, focusing on markets with clear breakout potential. In the current environment, gold continues to demonstrate its value as a hedge against monetary instability and inflation. Its limited supply enhances its appeal compared to fiat currencies, providing a solid foundation for long-term growth. What are your views on gold's potential to sustain its upward momentum despite near-term challenges? Or do you foresee market volatility having a significant impact on its price? Share your thoughts in the comments below. If you found this analysis insightful, don't forget to like, subscribe, and hit the notification bell for updates on gold and evolving market trends. Thank you for tuning in.